guys, this is Claudia here, back for one more week of learning and getting ready for the end of the year. So, what are the things that you should be thinking about right now? So, we are in almost November, so we have a couple of months to get ready, to get the books ready to file the tax at the beginning of the year. So, a few things we need to start thinking about is organizing your books. So, is everything categorized? So, the first thing we want to see is everything categorized. If so, is there any duplication? If there's any duplication, how do you fix that? So you got to think about things like that. Are the transfer correctly recorded and matched on the other side? Is your income reflecting what is supposed to be reflected, or does it seem to be inflated? Means that maybe there's duplicated transactions and things like that. Okay, so how do you make sure that everything is ready? So you start by categorizing your books, then you reconcile, make sure that every single transaction is ready to go. So it means every single transaction is being accounted for, categorized according to the bank statement, reconcile according to the bank statement. Once you reconcile everything, you want to take a look at the profit and loss in the balance sheet and make sure that there is no discrepancy. If there is any uncategorized income, you want to make sure you go through those transactions and categorize them properly. You want to make sure that there is no undeposited funds that's on the balance sheet. So in the income statement, you're going to look at uncategorized income, uncategorized expenses, or ask my accountant, which means the same, or anything that says miscellaneous expense, because miscellaneous expense doesn't mean anything. It means that those transactions doesn't have a home. It's not defined. You need to go through them and make sure that they have a place, either whatever it is, office or office expense, advertisement, whatever it is, it needs a place. And legal, whatever it is, you need to categorize them accordingly. So you want to make sure that there is no negative transaction in the income or negative transaction in the expense. If there's negative transaction in the income, it means that probably there's some expense being recorded on the income and it's supposed to be an expense. If there is a negative transaction in the income, it means it's an income that is supposed to be an expense, or it was not categorized correctly. Because let's suppose it's a refund, but the original transaction, let's suppose I categorize as office expense, but when I categorize the refund, I put it under something else, legal and professional, whatever it is, and then I have a negative amount under legal and professional because there's no expense to match up to that. So those are the things you should be looking at in the income statement. On the balance sheet, you should be looking at the balance on each of the accounts, each of the bank accounts, and the cash transaction. Take a look at the liabilities. If you have any negative liabilities, means that you're recording more payments to a liability than what is owned. So that means that you didn't record the liability itself to offset the payments. Asset. Okay. There is a lot of, if there is any uncategorized asset, means that probably a few transactions that were supposed to be transferred to another account or matched to something wasn't matched, was categorized incorrectly. So that needs to be corrected. And especially in the balance sheet, one of the most important accounts is the undeposited funds. You want to make sure that the undeposited funds is completely clear, except for transactions that didn't clear until the next period. So undeposited fund works like a clearance account. And right now, for the new accounts, the newer QuickBooks Online accounts, they're calling it payments on deposits. It's the same thing. At the end of the day, those transactions should be zeroed out, because it's just you record a payment to undeposited funds so that you can record the deposit and match it in banking. Once you record the deposit and match it in banking, those deposits, those monies are going to come out of undeposited funds. The reason why we do undeposited funds is to avoid duplicated income, because if you record the payment to your bank account and then you don't match because of whatever reason. I have somebody who asked, where's my payments? Where is the income from, the transactions coming from the app? And then she realized that there was a auto rule for that income that categorized the transaction automatically without her being able to match it to the app transactions. So you don't want to set up rules like that. But anyhow, those are the things you should be looking at into the balance sheet. I have a separate video for each one of them if you want to take a look at that. And then at the end of the day, you want to make sure that you have your income, your profit and loss, and your balance sheet. And statement of cash flow is mostly for you if you want to take a look how the cash flow is doing with your business. And then many accounts will ask for other reports as well, right? Okay, so this is kind of like a little introduction of things that you need to do in order to prepare for tax season, which is coming up. So yes, time to prepare. If you feel overwhelmed and you don't think you can get it done and you need somebody to educate or help you on a one-on-one basis, feel free to contact us. You can hire us for a one-on-one. We can help you get caught up and teach you how the process of the workflow, how the workflow works in QuickBooks, and go over transactions until you know exactly what's going on. If you need to integrate apps and things like that, we can help you as well. And then leave you in a situation that is easy for you to maintain afterwards. Or if you want somebody just to do the books for you, you can focus on what matters most. Yes, you can do that as well. We can take care of that for you. Feel free to contact us. Our contact is down below. Now, today we're going to talk about clearance account. We had somebody who asked a question on one of my YouTube videos. How do you manage clearance account? First of all, why should we have a clearance account? And what is a clearance account? Okay, a clearance account, first of all, it's a bank account set up that is not linked to any banks. The purpose of the clearance account is just, as the name says, is so the transaction that doesn't go into your checking account, into a regular bank account, such as maybe items that you bought with your personal credit card and things like that is not linked into QuickBooks, and you don't want any personal transaction in QuickBooks. So you create a clearance account so you can enter those transactions, right? You can enter the expense and so on and so forth. That's one of the reasons. It is a bank account. It's not a petty cash. It's a bank account where you can record transactions. At the end of the day, you want to record a journal entry to remove the balance from the clearance account and put that balance into an equity account, such as owner's investment or something like that. We're going to go through the whole process today so you can see exactly how it works on a clearance account. At the end of the day, at the end of the term, that clearance account should be zero. Now, there's also clearance accounts that are created for apps. Some of those apps, like Square, depending on how you set up Square, there is a clearance account. PayPal has a clearance account as well. So that means those accounts are linked, but it's not like a live bank account where transactions coming in, coming out. There's a lot of manual transactions that are recorded for the deposits and so on and so forth, right? So with app transactions, what happens is that the deposits will come through and be recorded into the clearance account. So it will go into your books, into your income as a sale, as income, but first it's going to go through the clearance account, and then it's going to go out of the clearance account and match into your bank account as a transfer. And then the other transaction will be the fees being charged for that transaction, for like merchant fees or whatever it is. Okay, so we're going to go straight to QuickBooks. We talk a lot, but we got to see, how does that work, Claudia? Okay, that's what we're going to talk about. Okay, here it is, QuickBooks. So let's see if we have a clearance account. We're going to create one if there's, okay. So this is our simple account. So we click on the left-hand side, accounting, chart of accounts. And my voice is kind of a little, I don't know, allergies, whatever it is. I'm not sick or anything, but it's kind of sounding a little funny. So sorry for that. Okay. So there's a couple of there's a checking and a savings account here. I'm going to create a new account. So see the green on the right hand side, we're going to create a new, this is the new setup, by the way, on the chart of accounts for QuickBooks. I want to say that I actually don't like it, but you can't say it otherwise. But anyhow, I think that is good in some ways, and the other ways I really don't like. I like the other way. But anyhow, things are always changing, and hopefully for better. Okay, so we're in this new setup. When I click on new account, for the first thing I want to choose is the type of account that I'm creating here. It's not income, it's not expense, it's a bank account. It's a clearance bank account, so I can record expenses, income into that bank account, right? So there's assets, credit card, liabilities, and equity. So bank. Okay, we're gonna click on the arrow here and select that. Can select as a checking account. Okay, and we're gonna name it. So under just checking, we're gonna name this as a clearance account. How creative is that? You can call whatever personal checking or other, whatever you want to call it. But it's a clearance account and it's not linked to the bank. So there's no transactions flowing from the bank. Okay. All right. So we're going to, any transaction recorded. See, one thing I wanted you to see here. And let me move my picture. Sometimes people complain, I get on the way. Sorry for that. Sometimes I get on the way. Okay, so this is where the green button is to create a new account, and this is our chart of accounts. The first thing is going to show up on the chart of accounts, it's the bank accounts. So what do I have here? We have a couple of checkings. In the clearance accounts, it's under the checking account, and there's nothing in there. And under type and detail type, do you see the little two arrows under checking? It means that this account is linked to the bank. It means transactions are flowing into QuickBooks and out as well. So there's transactions in and out. It's flowing. It's live, right? Now the one that we created here called clearance, there's no arrow. There is an indication that there is no transaction coming from any bank. Any kind of transaction coming into this bank is recorded manually, either coming through an app or we're recording it manually. Okay, so there's zero balance here. See, there's nothing in there. We're going to record the first transaction. Okay, so let's suppose that I was out and about and I had to purchase a few things and I didn't have my business credit card. I use my personal account. So how do I enter that transaction? That's what we're going to do. So we're going to create an expense. There's different ways to go about that, by the way. Some people like to use journal entries. Some people like to use expense in this case. So you can do either or. This is more simplified for me. So we're going to put the name of the payee. Let's see. I went to Costco. I'm not being endorsed by Costco, by the way. Just figure, Okay, so Costco is not here, so it's going to create a new vendor. Okay, the only thing I actually need to do, this is part of the new look of QuickBooks, by the way, the new feature. So we're just going to save here. I'm not going to put any details. I don't have to. But if there is a vendor you're creating with all the details, you can add all the details if you prefer. But I don't need it. I'm going to say that I went to Costco. I bought some office supplies, office expense, water, whatever, whatever, paper, and I spent $120. And by the way, when you use a personal account, I would you should be attaching your receipts to your transactions anyways. But if you are using your personal card, there's an extra must attach the receipt. I have a dad brain right now. Gotta breathe. So here it is. In order to attach that, you just click on this little paper clip attachment. Look into your computer. Of course, you gotta have it on your computer. If you don't have, then you gotta get that first. If you're on the phone, you can do it on the phone as well. You can add expense, and you can snap a picture right from your phone and add the expense. But either way, you can do it like that. But if you're on the computer, sitting down, payment method, let's say, you can put here personal card. You can add a new saying personal card. Personal Visa or personal, whatever credit card you're using, or just personal funds, or whatever. That's here. If there's a check number that you wrote from your personal account, you can put, or an invoice you're paying, whatever it is, you can put it over here as a reference number as well. Like I said, attachment would be very, very important if you have that with the receipt, right? That's important. Okay, so that's it. So now see that it's automatically trying to add this to the checking account, because that's the account that we usually use. So you want to have to click on the arrow right next to payment account, and you want to select the right account, which is the clearance account. Okay, so you select the clearance account and you save and close. Or we can save a new. I'm gonna add a couple of transactions. Okay, I'm gonna add another one. So let's select another one. Let's see, Bob's Burger Joint. I took some employees out, and meal and entertainment. Actually, by the way, if you have meals and entertainment, you want to change that to just meals. Oh my word, my voice is disappearing. Okay, so just take out the entertainment. I'm gonna show you how to correct that, by the way. But anyhow, meals and entertainment. The reason why is because entertainment is not a tax deduction anymore. So you just want meals, right? On the description, I don't know, took employees to lunch, whatever it is, okay? And then you ended up paying with your own credit card and spend $400 there, whatever it is. Attach your receipt here, and then if you have a tag, by the way, if you're tagging these, because let's suppose you have a job that you want to track, this is where you're gonna put a tag and so on and so forth. Everything that you do, we have a video. No, not on expense transaction, manual transaction. I think I don't think I have a video on manual expense transaction. Okay, but anyhow, you would add anything that you want to add to the expense, the tags, reference number, add the attachment. If there is a customer that you're acquiring this expense in behalf of a customer, you wanna select the customer here. If you want to make this a billable expense, you can select billable. By the way, we have a video on billable expense. If you want to know that, just go ahead and watch it. But anyhow, this is the expense. Another one, save and close this time. Oh. Save and close. Okay. Now, look at this. My account has a negative amount of 520. What does that mean? Oh, by the way, if you look at a bank account and it has a negative amount, that's not good. Unless you're really negative with the bank, what it means is that, you spend more money than what you have in the bank account, or there's more transactions than in the bank of expense transaction than income coming in, recorded at least. So a lot of times that happens because there's duplicate transaction. There is a possibility though that like if you run payroll through your checking account and they run the payroll already in the system, usually they do it a day before or so, day or two before they run in the system, and then it clear your account on the following day. So if that happens, so your account may actually be negative, showing as negative, because the money hasn't cleared the bank account to match with the income and so on and so forth. So it's showing the expense before it actually happened, right? Does that make sense? I hope so. So anyhow, expense is recorded, but income is not recorded yet. But that's what it is, the clearance account. I just have expense recorded. So now what do I do with this balance to clear it out? That's what we're going to talk about. So you can do a couple of things. You can do a journal entry. I'm going to show you both. By the way, if you want to duplicate the page, I always like to duplicate the page. You just drag your mouse up to the top, right click and click on duplicate, and then you can go back and forth. I like to do that because I want to see my balance over here, and then I'm going to create a journal entry. Top left hand side menu plus new, and I am going to record a journal entry. There's always two sides of the journal entry. I'm going to record for whatever date that I want to clear the account. Let's suppose that I want to clear this account right today, or I can do it the 31st of October if I know that there is no more transactions coming through. Oh my word. Like I said, I'm not sick, but my voice is giving me a hard time today. But anyhow, we are going to select the bank account, clearance account, and see that there's a negative amount. So I'm going to have to debit. I'm going to have to add money to the bank account. So I'll debit because the bank account is an asset, right? $520 negative. So I'm debiting it for $520. So I'm putting money into it. On the description, I'm going to say removed balance from clearance account from transactions paid with personal funds. Okay, personal funds, anything that is not connected with QuickBooks. And I'm going to copy this. I'm going to put it on the second line because as I mentioned to you, any journal entry requires two entry, one debit and one credit, right? So here, where am I going to send this balance to? Well, if I paid with personal funds, I'm going to record this as owner's investment or owner's equity. So I'm going to scroll down till I find it. Okay. So we don't have owner's equity here. We just have a couple of equity accounts. We can create one right from here. See the plus new? Add. And then this is the old system where you created account. So I'm not creating a bank account, by the way. I am looking for an equity account. So click on equity. And what I'm doing is owner's equity. I think there's actually I can put it as partner's contribution. Okay. If you have a partnership, or you can just call it owner's equity, that's the same thing. Okay, we're going to save and close. All right, so this is money that I'm putting into the company, okay, from my own funds. I'm going to save and close. Click here on the green, save and close, and voila! Look at the balance on my checking clearance account. It's 0. That's what I want. If I click on view register, I have my 2 expenses, and then I have my journal entry removing the transaction here. Okay, as I mentioned to you, there's different ways to record that. So I'm gonna delete this journal entry, and now we're back to the same balance. The other way we can do it is record as a transfer. It works the same way in this situation, okay? But it's just a simple way to record this. So I click transfer, and it's just asking where's the funds coming from. I'm gonna say that is owners. It's coming from my own funds. So it's that account that I created, which is partner contribution, equity. And where is it going to? It's going to that clearance account, the checking clearance account. And how much? 520 positive. Okay, so it's money coming out of the partner contribution going to the clearance account. So we're gonna save and close. And it does the same thing. See that? It's exactly the same thing, but it says transfer over there instead of journal entry, which is the best way. In this situation, either way is fine. So, because you're just recording the adjustment at the end of the month, okay? Now, with equity accounts at the end of the year, you want to remove that from partner contribution and add it to retained earnings. So you do it as a journal entry, but this is a subject to another video coming up. But that's how you treat clearance account. So I hope this was helpful and that it cleared the confusion to many people who deal with clearance accounts. So at the end of the day, when should it be zeroed out? At the end of each term, right? If it is a app clearance account, so it depends because sometimes, like Etsy, for instance, sometimes it clears in the middle of the month, and at the end of the month there's always going to be some kind of balance because it didn't get paid, whatever it is, right? So it depends, but the idea is that it's transaction in and out, coming in and out, deposits being recorded into that clearance account, or expenses in this case. And then if it is income, if it is that app income transaction, so the transactions will automatically come from the app as a deposit. And then what you do is that on the checking account, when you see the deposit, you will record that as a transfer. Usually the app will automatically generate that transfer, and then you would match that, right, as a transfer. But if it doesn't, when you see that income, you record it as a transfer. Kind of the same thing as a cash account. Cash account is kind of a clearance account because you're just recording all transactions manually. All right. If you like this video, give us a thumbs up. I'd like to thank everybody for spending this time with me. I know that, learning how to do your books is not always an exciting subject, but it is for me. I hope I can help you feel the same way about bookkeeping, about keeping your books. If not, like I said, my information is down below. You can always contact us so we can take care of your books, and you can focus your attention on what you want to do in order to make money. I can't emphasize enough the importance of keeping your books up to date, not just for taxes, but mostly to know your point of reference so you can take your business to the next level. Any successful business needs to know how you're doing financially and needs to have everything organized. Especially for income, you want to make sure that every single transaction is accounted for. And your transactions are not only categorized, but your bank accounts and your liability accounts are all reconciled. And as you grow, that's an added necessity of making sure that those things are done to avoid any kind of I don't know. I had clients who lost checks and they found it because they realized, the payment was recorded, but it was sitting on undeposited funds, never deposited in the bank. Or I had clients that found discrepancy with the app, or unfortunately, I had clients that found out that maybe there was somebody that was not depositing the money on the right account, the business account, but on their own account. So, yes, it is so important to record all your transaction. Make sure that everything is accounted for and organized. And most of all, how important it is for you to be able to go into your reports and know exactly what's going on with your books. We're going to be talking about the reports on the next videos, so stay tuned. And we're going to talk about how to read a profit and loss. They call it a vertical financial analysis, means that compare all the numbers to the total revenue. Anyhow, more to come. So if you like it, give us a thumbs up, subscribe to our channel. We're going to come back with so much more. But give us some love, thumbs up, subscribe. And until next time, keep on smiling.